Every week, I take a look at the movement between gold, silver, platinum, and copper. And going into the close of last week, all four metals corrected downward. This last week, all four metals moved higher, but only three of them fully recovered. And that difference matters more than the gains themselves. Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. Let's break down what happened and what it actually tells us as stackers. Congratulations to, is this Ekpaname? EC Paname? Ekpaname. Please correct me what your name is, but congratulations for being the first comment on my last video. Y'all find him down below and start a conversation. Before we talk about each individual metal, we need to set the stage, because price movement without context is just noise. Last week, we saw a broad correction across all four metals: gold, silver, platinum, and copper. No outlier, no exception, everything pulled back together. That alone tells us something important. When all metals move down at the same time, it's rarely about the metal itself. It usually is about positioning, liquidity, or short-term sentiment. This wasn't a fundamental breakdown, this wasn't a demand collapse, and it wasn't a loss of confidence in metals as a whole. It was a reset. And resets are healthy, especially after strong moves. Now this week, all four metals moved higher. That doesn't automatically mean bullish. It means the market had a chance to decide whether last week was a warning or just a pause. And how each metal recovered tells a very different story about how capital views risk right now. Let's start with gold, because gold sets the tone for everything else. Last week, gold pulled back 4.44%, and that's not insignificant, but it's also not dramatic. This week, gold gained 4.1%. In other words, gold essentially walked itself right back to where it started. Now, that's not a complete recovery. However, since 45.09 is the closing, and that is so close to its all-time high, it feels like a complete recovery. And that's not boring. What it's telling us is gold didn't overshoot. It didn't lag. It didn't struggle. It corrected, paused, and recovered. That tells me that gold is still being treated as the monetary anchor. When investors reduce risk and gold gets sold along with everything else, when they re-enter, gold is one of the first places capitals feel comfortable returning. This is why gold doesn't usually lead in percentage gains, but it also doesn't usually lead in damage. Gold's job isn't excitement. Gold's job is continuity. And this week, gold did exactly that. Now, silver. And silver always deserves a little bit of extra time. Silver fell hard last week. 8.18%. That's nearly double gold's breakdown. And then this week, silver rebounded 9.77%. That's silver in a nutshell. Silver exaggerates both fear and confidence. When sentiment turns negative, silver drops faster than gold, and when sentiment improves, silver snaps back even harder. This is why silver is emotionally difficult to hold on to. It constantly makes you question your timing, but it's also why silver rewards discipline. If you bought silver before the correction, last week probably felt very uncomfortable. But if you bought silver during the correction, this week feels validating. And if you dollar cost average, both weeks are just part of the process. This week, silver didn't just recover, it slightly exceeds its previous level. That tells me that there's real buying interest on the dip. Not speculation, not panic, accumulation. And that's exactly what long-term silver strength looked like to me. Moving on from here is where this week gets pretty interesting. Starting with platinum, platinum was the strongest performer going into the correction. When it ran up, it went up 24%. It attracted more speculative interest and got more stretched. So when the correction came, platinum paid the price. Last week, platinum fell nearly 15%. That's not quite a pullback anymore, that's a shakeout. This week, platinum rebounded, but only 6.1%. That is a strong move, but it did not fully recover. And that matters the most. Platinum is telling us that the market hasn't finished digesting it yet. It isn't weakness, it's hesitation. When platinum runs, it tends to move in a sharp, concentrated phase. It pauses, consolidates, then confidence returns, and it tends to move quickly again. What we're seeing right now is the market deciding whether platinum's previous run was early or justified. And those moments when a metal lags while others recover are often where long-term position quietly happens. And finally, copper. Copper doesn't trade fear. Copper doesn't trade headlines. Copper trades reality. Last week, copper slipped 2.5%. This week, copper recovered 3.5%. That may not sound dramatic, and that's exactly the point. When copper recovers alongside gold and silver, it tells us something very important. It tells us that this correction was not a signaling economic collapse. It wasn't signaling a breakdown in demand. It was signaling short-term repositioning. Copper is often the quiet confirmation metal. It doesn't lead rallies, it validates them. And copper recovering this week supports the idea that the pullback was a pause, not a reversal. So to close this out, let's take a look at how each of these performed against each other. And instead of just looking at the past week and seeing which one rose the most, we're actually going to be comparing the recoveries. So last week, silver recovered to a tune of a 1.59 net gain. Copper recovered to the tune of a 1.04% net gain. And gold almost fully recovered, but is still 0.34% below 2 weeks ago. Platinum is actually 8.7% below its previous level. So this tells us that silver and copper were the quickest to recover and even overshoot. Gold remained steady. It didn't need to rebound as sharp to show its stability. And platinum, well, platinum's still catching up, which highlights something pretty important to know. Even volatile metals can lag in a strong upward movement. By looking at these recoveries and not just prices, we can see how capital moves within the metals. Volatile metals can overshoot lag. Stable metals can act as anchors. And for stackers, it shows why diversifying across the metals truly matters. Some recover fast, some hold their value, and some really just require patience. So if you like the video, make sure you go down and give it a thumbs up, comment some questions, and respond to comments to start conversations with some people. Subscribe if you haven't, and share the video with anyone you think might enjoy this type of content. But most of all, thank you so much for watching. I truly do appreciate it. But as always, just remember, every ounce adds up. So no matter how small, just keep stacking.